Welcome to the regular look at WTI crude oil price and where it might be heading next. Going to dig into the technical analysis, some sentiment, some fundamentals to check out that price action and find out where it could be moving to. So with that, let's dig into that analysis. So first up, some sentiment tools here used through technical analysis. At the bottom we got seasonality. You can see it's starting to peter out and not be so aggressive through the summertime, so pretty neutral there. Then heading on to the commitment of traders data, very important in the sort of more medium longer term direction of the price. We've got our large commercials in the red line and large speculators black line. We expect the commercials to do the inverse of the price and the speculators to follow the price, and that's what they're pretty much doing at the moment. So pretty bullish there. So mixed bag from those sentiment tools, neutral to bullish. Baker Hughes rig count numbers then great for a feel for the sector as a whole. Still looking pretty bullish. Change from prior count plus 14 and change from last year plus 273. So like I say, still looking pretty bullish. For those that follow inventories, they're out on Wednesday 25th UK afternoon time, and last week was better than expected, minus 3.394 million barrels versus forecast of 1.383, and same forecast for this week. So watch out for those numbers if you follow those. So back into the technical analysis, weekly line chart here. And not a lot of change from the last time we looked a few weeks ago. It's that consolidation zone. You know, it's 105 to 110-ish sort of area. I've just drawn on a sort of symmetrical triangle pattern there building up, which could provide a breakout in either direction. Marry that into the fundamentals, what's going on in the world at the moment, and you could see a reasonable move, you know, to the downside back to say $80, and to the upside next, you know, if it can break those highs around 116, 120 area, then it's up to, you know, the 140s. I've taken the 4-line break chart down to the 4-hour setup to give you some more aggressive entry points. To the upside, it is with that reversal in place at the moment, 110 spot 75 and then $115. So into the daily Heikin-Ashi chart, and what is that showing us? Well, we got mixed bag of the signals at the bottom, so pretty neutral. Volume volatility also pretty neutral. Now if we head on to the price, the probability power box indicator, well, it's given us a more likelihood of a down move, 65.3%, and that's that white line inside the box if you draw that over to the price. And that's also around those red dashed lines, that's the institutional power zones. So that's often, you know, good support, resistance, or target areas for the price. And the trend is green and up. So we've got a negative power box, we've got probably a neutralish red dashed institutional power zone, and a, I would say, probably bullish uptrend there. And I've also drawn on those two purple trend lines just to show you really the consolidation in the price between those ranges starting sort of mid-March time. So if you're a short-term swing trader, scalper, then you've got some ranges to pick off there if it stays within that zone. But overall, this one to me, despite the probability box there, feels a bit more weak bullish, but you know, if you weigh all the signals up together, it remains pretty neutral. So $1 block size used for the Renko chart for WTI. Our signals at the bottom, pretty bullish. Remember, that's shorter term signals, that is. If we head on to the price, we can really see, you know, that ranging price, you know, those ranges that it's bouncing up and down between those Fibonacci zones. We've got a short term sell on the 2-line pink box breakout, so but it's just trying to get back into the neutral area there. Now if we're talking price targets, to the upside, if it breaks 115, then we've got anywhere really between 125 and 135, and to the downside again, if it goes and can shift through $105, even $104, then late 90s and late 80s could be the downside targets. So score time, neutral overall then for crude oil again, as per previous. Despite the shorter term feeling a bit more bullish, there's too many other factors at play to neutralise my overall opinion. Like I say, Heikin-Ashi neutral. Commitment of traders still holding bullish, but the others, like I say, neutral, like seasonality, inventories. And line break chart if you want to get into the upside, some numbers for you there. Now in terms of targets, still pretty attractive, 2.85 and 4.28 to 1 to the upside, and 1.8 and 2.8 to 1 to the downside. But overall score for this time is neutral. So crude oil, WTI, that is still in consolidation phase at the moment. Interesting to see where it heads next. Need probably a fundamental shift to get it out of that range that we looked at. Let me know in those comments below where you think the price may be heading next. Like to hear your thoughts and ideas there. And if you like today's video, please give us the thumbs up. Don't forget to hit the subscribe and bell buttons. And all that's left for me to say is thanks for watching, good luck with the trading, and I'll see you in the next video.